Hi and welcome to episode 5. My name is Julian and this is Ion Limited, and here we're going to talk about the 7 types of income streams that are going to make you a millionaire in the next 10 years. Today, income number 5, we're going to be talking about a very popular one, and that is real estate. Now, real estate is one of the topics that for many people is a bit of a scary topic to touch, but it shouldn't be. I mean, real estate is just like anything else. You can ease into that step by step. I want to tell you one very important thing. Most millionaires that are out there are millionaires with real estate. Real estate has become globally one of the most popular and most famous investment vehicles to get people to some serious types of income. So this is one where you definitely want to dig a bit deeper. There's a lot of courses you can take, books you can read, and this 10-minute YouTube video is definitely not going to prepare you for it. It just should give you a basic glimpse. Now, what is important about real estate is that here we're talking about real estate investments of real estate that you are not living in. Now, what does that mean? It means your own home, contrary to many people's beliefs, is not an asset. Now, an asset brings money into your pocket. Your own home is a liability. Now, many people are going to say, yeah, but I bought my home, I bought my apartment, and it's appreciating in value. When I resell it, it has more value. You're right. At that moment, when you're selling it, that's when it becomes an asset for one instant. The other time, it is a liability because it takes money every month out of your pocket. Now, of course, there's the comparison, when should you rent and when should you own your own home? Now, there's 100 different opinions on out there. Here's my personal input to that. If you are planning on staying in the same area for some time, or you have accumulated enough safety backup money to make a down payment into your home, and your monthly backup that you're taking out of your income is higher than your mortgage that you have to pay, it does make sense to buy your own home rather than rent. So what does this mean? If you plan on traveling in the next couple of years, if you're not sure if you grow and you need to move again, if your backup money, your safety pot is not large enough for a down payment, and your monthly income is not stable enough or safe enough to pay for your mortgage, you definitely do not want to own your own home, because that can break your back. And many people are stuck in their jobs simply because their mortgage is so high and they cannot scale down. For example, if you're renting, you can always move and you can be very flexible. Yes, maybe 1 month your rent is $1,000 and you stay at $1,000. Let's say you need to bootstrap and you need to scale down. You relocate into an apartment where you just pay $200 in rent. If you own a home, you're less flexible and it's a bit more tricky to have this flexibility. Now, this is a really important point. Whenever you look at the Forbes top something lists, you will always see that the own home of the people is taken out of their asset evaluation. There's a reason for that, because it's a liability, not an asset. Now, let's look at the real estate investing. Now, here I want to give you a lot of my personal input. My first apartments that I bought were, and this is a very good tip, in my own area. So this is where I grew up. Now, the reason for this, and you could do the same thing, or you should do the same, always invest or start investing in your own area first. First of all, you know the area really well. Second of all, you probably know people that can help you with this. And the third thing is, it doesn't take you a flight or it doesn't take you hours of driving to get to your property if you have to. Now, this is just some personal input, and of course there's exceptions to that, especially today with social media, with being hyper-connected. There's a lot of things that are not as typical anymore, but I still think it makes sense if you can buy an apartment or you can buy a single family home close to where you are, for the very simple reason, because you know the area, it's simple to get to, and you know people, lawyers, you know real estate agents that are around you, probably speak the same language and can help you deal with all that. Now, this is where I would start. Now, when picking a real estate property, it really depends on what you want. If you want a turnkey property, that means you just put money in and stay away, and then you say, okay, look, I don't want any work, I don't want to put any effort in, I just want to collect my paycheck every month, or I want to go for appreciation, that's a different story. But definitely you want to look for something called motivated sellers. That's one of the key words, and we're not going to go too deep into it, but motivated sellers are people that want to sell their apartment, want to sell their property, and have a certain time pressure. Now this can have different reasons, but if you can find that, you're always going to win. Now I give you an example. I bought recently an apartment from someone who had to resell it because that person needed to move and needed the money. Now the good thing was, with a motivated seller, I can bargain down because the person is maybe a bit happier, even if that person loses maybe 10,000 US dollars, and I can undercut that and I can go in under market value. I get a deal on that. When you choose your property, there's one famous saying, and I'm pretty sure you've heard about this. It is location, location, location. What's important about this is you don't want to buy cheap, you want to buy value. Now, cheap doesn't mean it's not value, it just means you want to look for what you buy. Just because something is 300,000 US dollars doesn't mean it's cheap, it doesn't mean it's expensive. Always look at what you're getting. And location here is really, really, really important. Now I love buying, not in the super high prime location, but I also don't like buying very outside. I love to buy in that middle spectrum where I still have a lot of potential appreciation, but I don't buy over the value. So that means I pay too much for what it's actually worth. Now, when you look into real estate, there's different ways how to make money in real estate. I want to focus on 3 really important ways how you can earn money in real estate. The first one is so-called appreciation. Now, this has to do with you buy and you sell. So basically it means you buy something, let's say at 100,000 US dollars, and you hold it, and then the property appreciates and you can resell it. Now here's one very typical misconception. The misconception is people believe real estate appreciates extremely a lot. Now actually, stocks appreciate so much longer, over a longer period of time, so much more than real estate. Now this sounds counterintuitive because we all have heard these stories where someone bought an apartment for 100,000 US and then sold it for 200,000 US maybe 3 years later. Now important here is this. These are the exception to the rule. The rule on real estate is, and you can read countless of literature on this, that the average appreciation is based on inflation. So that means if inflation is 5% per year, your real estate is going to also appreciate by 5% per year. And this is really important because many people think real estate is a good way to appreciate your capital. Now, there are exceptions, right? I'm based in Hong Kong. Hong Kong is a crazy appreciation market. All of Asia, especially emerging markets, crazy amount of appreciation. But over time, the appreciation always comes back down. There's no cheating to this rule. That's really important. So, appreciation, really important. Of course, you have to be aware when you buy and sell, basically you flip, that's called flipping. If you buy and sell really quick, there are taxes. You have to pay appreciation, you have to pay capital gains tax, you have to pay income tax, so you have to be aware of where you're doing this and what are the certain rules. Second type of income, that's my most favorite one, is so-called yield. Now yield, also called rental income, is my favorite one. And this is what I focus on. And you don't have to focus on that, but that's what I think is the best one. So if you have a cash flowing real estate property, that means the amount of money you get in from your tenant, and this is basically here, we're renting out that real estate. That's basically the idea of real estate. If I'm not living in, I try to rent it out, right? If I have a tenant and that person pays me $1,000 per month in rental income, minus what I have to pay in taxes, minus what I have to pay for insurance, minus what I have to put aside for backup, and then minus what I paid to the bank for my mortgage, at the end there should be a net profit coming in every month. And even if that profit is a little bit over zero, it's cash flow positive. And that means I can scale such real estates unlimited. I could have 1,000 of these real estates if they are cash flow positive. That's really important. So one of the key things, and if you read Rich Dad, Poor Dad, or you read Robert Kiyosaki's Real Investing Guides, you will always see that this is one of the main key terms. there's one really great website out there. Go to biggerpockets.com, biggerpockets.com. They have podcasts. I think it's a great resource guide for real estate. The third, and many people totally underestimate that, income stream with real estate are tax benefits. Now, these are really, really huge because real estate, if you rent it out and you use it basically commercially, you're not living it in for yourself, there's tax benefits. There's tax write-offs, and they can really be beneficial. Now, here's the very important thing. Never buy real estate because of tax benefits. That's the worst you can do because that normally puts you in a bad financial situation. If I choose my priority, that's my priority one, how I choose my real estate. It has to be cash flow positive. That means every month I make more money than if I wouldn't have had that. So as long as it's cash flowing more than zero, that's good. The more it's cash flowing, the better, right? So that's the key. Second thing is I look for real estate that is very likely over the next 10, 15, 20 years to appreciate. Why? Because it doesn't make any sense that you are making a yield, but at the same time the apartment prices are going down, property prices are going down. Basically, it makes no sense, right? So you want to have some appreciation, at least on inflation. So the more you can get away from inflation, the better. And then the third benefit, and that's always an added benefit, is the tax benefits. So that means I get certain tax write-offs, I get tax breaks, and that is really, really key and very, very helpful. Now, there's one key concept, and many of you watching here are thinking, oh my gosh, but I don't have all this kind of money. I don't know how all that. Really key, on real estate, there's very good ways to leverage other people's money. You can leverage banks' money, you can leverage people you know. If you have good knowledge here, you can have so-called no own money down deals. That means you don't have to put in any of your own money. Why? There's all different kinds of tools and skills. If you go to biggerpockets.com, really easy. We're probably also going to do some real estate focus here because I think it's a very, very powerful vehicle to get into the Millionaires Club. So with this, I hope that helps. Focus on whether you want to rent or buy. Generally, renting is the better option. Okay? Sounds counterintuitive, but this is how it is. If you buy, 3 major ways how to make money out of real estate. Of course, there's other little side things, but these are the 3 ones. Appreciation, yield, and your tax benefits. Start in your own area first. Look for location. Check out the property, get some experience, get motivated sellers, and the more experience you can use other people's money. Check out, I'll post the links below. These are the sites where you can really get some more leverage out of this. And I hope that gives you good value for income number 5. Next Tuesday, we are on income number 6. And then we have one more left to go. Hope that gets value. If you like it, please share, please like, follow our channel, subscribe to our newsletter, social media, Facebook, LinkedIn, whatever. So with this, have a great week and talk to you next week. Cheers.